everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit. I think we all understand that. Obviously, there are potential profits with each trade, but we want to manage risk in case of the downside. And we have some tools built into our web trader and our app that help to make that quite a bit simpler. We'll go over some of those functionalities if we get a chance within the session. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, which is where we can access our web trader platform from, we also can take a look at where our mobile app can be found. And so the same functionalities, whether it's the risk management tools, or our signals or other trading features and tools that are found in our web trader, they're also found in our mobile app. So if you tend to trade on the go more, feel free to download our app from the major app stores onto your mobile devices. And I think you'll find that it's quite user-friendly and the features are just as useful as in our web trader. Now, whether you're trading on MT4 accounts or MT5 accounts or both, you can use all of those accounts from our app and our platform. Now, if we log in the upper right corner here from our main website, we'll be in the web trader platform. Now, I know our focus this evening is technical analysis, but we probably should touch on the fundamentals a little bit just to get an idea of maybe which way the wind is blowing, so to speak, with some of the different instruments and whether you think there's positive sentiment on the markets or negative sentiment. In general, there's a bit of fear right now about regional expansion of the war situation in the Middle East. So that's maybe got the markets a little bit on edge. And then beyond that, the economic announcements, in particular out of the US, continue to point towards potentially a soft landing coming out of all of the high interest rates and the high inflation as inflation has come down. Now the US in particular has saw fit to start lowering interest rates. It's expected that perhaps they'll lower the interest rate further after the 50 basis point cut that just occurred in the US. And so this has been bullish up to this point since that rate cut on the equities and the major indices created a bit of optimism on the markets. But that's something also we've got to make sure is in balance with other things that are occurring, like we mentioned about the fear with maybe war escalation in the Middle East. And, traditional safe havens could be something to look at as well. If there's fear out there, either about inflation coming back because of interest rates being lowered, there's optimism on the equity markets, maybe from interest rates going down, but maybe there's fear that that's going to weaken the US dollar again, and perhaps safe havens of different sorts could be attractive as well. We'll see what the technical signals are and look at the technical analysis. But these are just some thoughts to have in your mind, what you think lower interest rates might do to something like the strength of the US dollar, the attractiveness of other instruments, and also what you think these regional fears might create in terms of attractiveness to safe havens and fear maybe on the equities and other areas. So with that in mind, let's take a look then at what's happening with some of maybe our technical signals would be a good place to start. So we mentioned gold as a safe haven, potentially that some might look to if they have fears about different things. And so if we take a look, gold has been hitting all-time high after all-time high these past days, weeks, and months. Obviously, there have been pullbacks in between, but gold's been on quite a run really for the past couple years. Even through higher interest rates, gold found a way as a safe haven to keep climbing, and now with lower interest rates, the beginning of the rate cuts, gold continued so far to push up higher. So we'll take a look at the technicals on this And what we can do first is look at the signal and see what the prediction is here. It doesn't surprise me, it's a buy signal. I was kind of alluding to the fact that lower interest rates tends to create a weaker currency. And if you are holding the US dollar and you anticipate, wow, they might continue to cut interest rates still yet even this year in the US, if that's your thought process, then you'd be thinking, well, that could bring back inflation potentially and weaken the currency if interest rates go down. So then maybe gold starts to look attractive again. And so here we find a situation where we might have anticipated a buy signal on gold. And as we look at the signal, there it is. And so, and this is kind of the process many times that I recommend you walk yourself through is think about the fundamentals, look at the recent news and information, and get in your mind, what do you feel different instruments should do based on the way you read the fundamental news? Then if you take a look at the technicals and they agree with you, then maybe you're more confident to follow the signal. And so if already going into this, I'm thinking, well, the USD maybe has reason to weaken, gold maybe has reason to go up, maybe for a couple different reasons right now. Then you take a look at the chart and you say, wow, there's a nice support level here drawn out in the signal. This is, actually I should be down, that's the live price. It did form a support level here on just below the live price. But if we go down further, the pivot line is a more major support level, typically within these signals, when we look at where the pivot line is drawn in the signal. And so we see that technically the prediction is from Trading Central that this is expected to climb, okay? If we then take a look and we can start to draw our own support and resistance, here's the first support level I see, okay? And it's just occurred today, right? It's broken above this price and started to form support here where it hit and went up. It hit and went up. It hit and went up. If it breaks this support, that in my eyes starts a downtrend, okay? And so that's a little sooner than 2640, which is the pivot line in the signal, okay? This is 2651. It's a more recent support level. The support level, or what they're calling the pivot line in this signal, is down here, which is 2640. And so that would be right here, okay? And so when you look at this pivot line, 2640 in the signal, you'd say, well, why did they draw a line here? It's floating above nothing down here. Where's the support? Why would they expect if it dropped to stop here? And so if you follow it across, you start to see what they're looking at. And if I then put that price level on the chart, I can really see this was an area where when this uptrend was occurring, you see it hit this price right here and dropped. Then it had trouble going above right here, and then once it went above, when it pulled back, it became support on this candle and bounced up further, okay? So that's where Trading Central is looking. If it breaks below this price, then it must have momentum, and this buy signal then they say is no longer valid. So if it breaks below this little support level, it's still a buy signal according to this signal. If it breaks below this price level, which is deemed a more significant old resistance level, which became a support level, okay? If it breaks below this price of 2640, then you see in this signal that they're saying then they would expect it to keep dropping further towards 2623 and lower, okay? But until and if it drops below here, as long as it doesn't, then this buy signal is still valid. But you have to look at the current fundamental news and decide, is this a trade I'd like to make? We do see that it hasn't reached the take profit zone up here. These green lines are the area where the signal expects it to maybe find some resistance. And so these lines are labeled resistance. It expects that if it gets up in this area, it might have trouble, at least temporarily, going much further. And so this is where the recommendation is in the signal is maybe to potentially take profit if you're buying, okay? Now, here's my take on the current fundamental news situation in this signal. You know what else is a safe haven when there's fear? The US dollar. Many times strengthens when there's fear on the markets, which then helps to pull down the equities. People sell out of maybe the stock market when there's fear. And if those stocks were purchased with US dollar, then automatically when those stocks sell, there's more buying into the US dollar in order to get out of the stocks if they're US stocks in particular. And so fear many times drives the stock market down and strengthens, in effect, then the US dollar. And so if you feel right now that there are a couple different reasons for fear, inflationary fear, which might be more of a driver to raise gold against the US dollar, but also fear of war, which might be more of a driver for the stocks to sell off and strengthen the US dollar, that kind of has competing interests, safe haven against safe haven. And so in a situation like this signal's not my favorite, because we're kind of halfway between the take profit and where you might put your stop loss below the pivot. So it doesn't feel opportunistic in terms of a technical entry point, because I have to risk just as much to get my stop loss below the pivot as I might make to get to the first resistance level in the signal. And the fundamental news right now, to me, feels a little mixed, okay? Yeah, I anticipated probably there'd be a signal to buy on gold because of, all of the situation with the rate cut in the US, and anticipated more rate cuts. But right now there seems to be war drums on the horizon, potentially creating fear, another type of fear, the type of fear that maybe causes equities to have bearish pressure and maybe the US dollar to have some strengthening. So I feel like we've got competing fundamental interests, and it shows on the chart, doesn't it? It's formed a new support level right here, where it's having trouble going up or down. Like, you've got two different things pulling on this. It's not a clear uptrend. It looks like this is tightened and it's getting ready to break one way or the other, but it certainly isn't trending upward like you would expect maybe to see in a strong signal. And the fundamental news kind of fits that right now. Okay, so this is my breakdown of this signal. Your breakdown could be different. But my point is, when I'm looking at the technical signals, I'm not blindly following them. I'm taking into account how I feel the fundamental news fits this signal. And right now, I think it fits it maybe in a mixed way. And so we have so many other opportunities. You might choose to pass on one if you feel kind of 50-50 about a particular, in this case, technical signal. Okay, or for any trade for that matter. Okay, so maybe we look at something more like US 500. Now, there's been optimism about the rate cuts, and so we can see maybe why there might be a buy signal, and that's what we see. But then again, we have fear that could strengthen the US dollar right now. Same situation as gold, and so again, we see a tightening of this move across. Okay? It's not running up and it's not running down. So for the same reason I might ignore the buy signal on gold, I might ignore it on US 500. But let's take a different approach then. If I'm looking at this and I think, okay, it's the range has tightened. And what I mean by that is we've got resistance above. Let me just drag the chart down so we have a little extra room. And again, for anyone who's new to the technical analysis, what is resistance? It's when you hit a price and has trouble going above and drops. And then it hits again and drops. It hits again and drops and hits again and drops. So this is clearly a resistance point in the market. And it happens to be, I think, the all-time high for the US 500. Okay, so it makes sense that might form resistance. And if it breaks through, then maybe it has momentum to keep climbing. And we can see examples of that in the past. Resistance here, okay, resistance, 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 testing, resistance. But once it went through, it became support and went up again to the next level. And then this lower level became support. Okay, the old resistance becomes new support, support, because whatever made it go above the resistance, that fundamental news still exists and it holds it above. Likely it was the rate cut that made this go flying up, and the rate cut still exists, so it holds it above that price. Okay, but now something new maybe is brewing. Maybe an escalation like we talked about in the Middle East war situation. And so we see resistance, resistance, resistance. And so in this type of situation, there are a few different things you can do. If you feel like fear is stronger now than optimism, that the optimism ran its course from the rate cut and now fear is kicking in from another storyline, well, then you can go with this opposite direction of the signal, have a short stop loss above the all-time high, small risk, larger potential profit to the next support level down here, and I could have, I don't know, 3 or 4 to 1 potential profit compared to risk. Okay, and that would be if you feel the fundamentals really are starting to swing towards a fear environment. Okay, and so if you felt that way, I'm not saying you should, but if you felt that way, then I'd be on a sell. And in this case, I'm doing the opposite of the signal because of my own technical analysis and my understanding of the current fundamental news. Okay, so now I'm looking at take profit down around 57.42. Why 57.42? Because I see this as a support level just below that where it had trouble breaking. So if it does drop, then likely it could pause and have a little trouble at this price and maybe bounce. And maybe I want to not be too greedy and take profit without having to break that support level. Okay, it's more of a scalp move, right? A shorter term trade. Doesn't mean you couldn't do a longer term move down lower if you thought it would drop further. Okay. So we're looking at take profit in this example, 57.42. And this is where the risk management gets calculated for you. It makes things very simple from a risk management perspective. So there's my take profit. My stop loss may be 58.05, somewhere above the all-time high. So it would really have to have some upward momentum if it's going to break the all-time high by a few points. So stop loss, 58.05, let's say. All right, now my risk reward about 2 to 1, a little better than 2 to 1 possible profit compared to risk. And the technical analysis is nice resistance level that formed with multiple contacts. It's above the all-time high. So I have a couple things in my favor to sell here, technically speaking. It is downtrending, which is nice on the 1 hour candles. And if we go to say 30-minute candles, we see that downtrend is actually pretty strong. We've got a nice little move here down from the resistance level up here. Okay, so we can then start to say, if this is the technical analysis I want with my take profit at this price, my stop loss above the all-time high where we put it. So now I'm all set with the technicals in terms of where I would exit with my take profit and stop loss. Now I need to adjust the trade size for my risk management, right? So let's say I want to risk 1% of my account per trade. Maybe I've already decided on that risk management. Now for you, it could be something different, obviously, but whether it's 0.5%, 2%, whatever you decide is your risk tolerance for the trades you take. And it could vary per trade or it could be the same. But I'm going to give an example that, let's say I want to risk 1% per trade. So now I can start to adjust the trade size. So if I go 0.5 lots, I'm risking 1,000 approximately on this trade. Well, I don't have 100,000 in my balance. I have 60,000. So 1% is around 600, not 1,000. So I need a slightly smaller trade. So 0.35. Now I'm risking 743 to this stop loss price. So you see how easy it is to start to zero in on what trade size is right for me based on my risk tolerance. So that's just under 600, 588, and making more like 2% profit, a little less than 1% risk. Okay, so once you get the trade size that's right for you, for the technical setup that you have, now you've got your risk management outlined for you, and you're ready to place your trade. Fully understanding how much am I risking to my stop loss, what's my potential profit to my take profit, and we went through the technical analysis of why would we sell here, resistance level, We went through some fundamentals about are they on our side or not. I think at worst the fundamentals are mixed, but maybe leaning towards a fear environment right now because the newer story is maybe ground invasion coming in the Middle East between Israel and Lebanon, and maybe I should say Hezbollah. So maybe ground invasion coming. That's the newest information, and that's more of a fear environment rather than rate cut, which is the older news, which created the optimism. So if you start to lean one way with the fundamentals, and then, excuse me, and then at the same time, the technicals line up maybe perfectly for a particular direction move, and if the fundamentals are leaning in that same direction, then maybe that spurs you on to make the trade. Okay, and it isn't for me to say you should read the fundamentals the same as I am. It's just a simulation. You might read it the opposite and trade in the opposite direction. That's okay, but it's the process I want to make the point about. That try to read the fundamental news. What are the recent technical, fundamental announcements, fundamental headlines with the news? What are the recent economic announcements? Jobs data came out recently, maybe not as weak as expected. The housing data came out of the US today, not as weak as expected in some respects. So the optimism towards a soft landing in the US is in terms of maybe not having a strong recession as we come out of the high inflation, maybe that improved. And so you start to look at that, and you start to look at the fears about maybe escalation of war, and you have to balance in your mind, what do you think is more important right now? What do you think will drive the current market in the next 6 hours or 12 hours if you're trading short term? Like this example is a shorter term type move. And so then you make the decision for yourself whether to trust then a resistance level in this case to sell from. And I feel stronger about this resistance level to sell from it than I do to buy on the buy signal, which maybe is not taking into account the latest headlines about escalation in the Middle East. Okay, so you understand technical signals that you see on the platform don't necessarily, when they came out, didn't take into account a headline that occurred or an announcement that occurred 30 minutes ago or an hour ago. Okay, so important part of the process is understanding the fundamentals as you go in then to looking at how you read the current technical setup. Any questions, comments before maybe we look at another asset? I'll pause for a moment. Okay, I don't see any questions popping up, but if I do, I will address them as they occur. Okay, so maybe we look at something different. Crude oil. Okay, some different drivers of crude oil. One would be if there's fears of economic slowdown, that tends to be bearish on crude oil. Rate cuts like have occurred tends to be bullish for commodities like crude oil, as the US dollar would weaken from rate cuts. And if there's anticipation that the rate cut could spur the economy, maybe that could create some bullish moves on something like crude oil. And so, but again, the rate cut is almost old news already. We can take a look at something like 2-hour candles, and we can see there's been a bit of a bounce here on crude oil in the past week or so. And now we see a big pullback in crude oil here. Okay. What do commodities tend to do when there's fear? When the US dollar is strengthening from fear? Exactly what you're seeing here. You tend to see a bit of a sell-off and a strengthening of the US dollar against something like crude oil. Now, if indeed there's escalation in the Middle East with the war situation, that actually could be a bullish event for something specifically like crude oil, because there could be supply disruption fears for the Middle East and shipments of crude oil, etc. So it's something to consider when you go into an instrument. what's happening regionally in certain areas, and could it affect what you're trading on? For example, the war situation in Ukraine, when that first broke out, it affected grain prices a lot because Ukraine happens to be a large exporter of different grains to the rest of the world. So Middle East, not so much exporter of grains, but crude oil is maybe something that would be affected more in this region of the world that we're talking about in the Middle East. And so what we take a look then with crude oil is maybe there's a support level. This drop then could be opportunistic. If you feel like fears are coming soon to drive crude oil up, let's say, if that's how you read the fundamentals right now, and then at the same time you say it doesn't hurt that they've lowered interest rates on crude oil, or I mean on the USD as well, which could help in general crude oil be a bit bullish, okay? And maybe a little better than expected housing data and things like that out of the US also could be bullish for something like crude oil. So if you start to add these things up in your mind and you say, you know what, I think the fundamentals are maybe more up on crude oil right now, especially the current driving story in the Middle East could be a large bullish event at some point, then maybe you decide, okay, I'm leaning towards up on crude oil, not down. Now we could take a look at the signal again. Crude oil signal is a sell, and it already hit the key level. So it's hit the support level on the signal. So the sell signal hit the take profit zone. Here's the first support. It's there on the support. And so had you done this signal earlier today, you'd already have taken profit. You're in the profit zone on the crude oil sell signal. So we've already reached the support level, and it tells you here, the market has already reached a key level. So at this point, you reevaluate then beyond the signal and say, what's next? Since the signal already came to fruition to the take profit zone, what's next with this? And so I'm even going to go to 1 week candles on this. And we start to see different support level zones that I've drawn. We can delete some of these that are down lower and delete some of these that are up higher. And we see here in the past on the 1 week candles, if I zoom in a little, a lot of support here where the price hit once and bounced, twice and bounced, 3, 4 times, bouncing off this price and then went up. And if we then go to the next time it hit this price, again, 1, 2 attempts to break this price around 68 and back up. And again, here it broke once and then right back above, okay? So this seems in the past to have been a pretty important price zone for a number of weeks where it had trouble breaking and bounced up. And if we go way back this way, we see it again, hitting here around this price and bouncing up, okay? So that's the bigger picture. Seems like an important price right here, around 68. Now, if I go to 1 day candles then, I can see we're just above this price here. Okay, this is where it broke below that once, came back above and found support again right here on the 1 day candles. And on the 1 week candles, we saw that this was just one time it bounced off this support and back further. It did it a lot of times on the 1 week candles, right at this price here. So if you were going to buy on this, thinking, hey, there could be a huge event soon that could drive oil prices up, then a stop loss anywhere below 68 or so gives you the technical advantage that it would have to break that support level again like it did here to hit your stop loss. And if you put your stop loss below this little break, then you have 2 support levels, the more major one here, and if you're below this wick here, then you've got a more patient stop loss at that point. So if I slide or draw a new line instead of sliding that one down here, then a longer term move, and I view this maybe as a longer term move because I'm putting the stop a bit further away, not just below the first support level, but below this little breakthrough that it did the one time. And so down around 65 could potentially be a spot where it would really take a lot of momentum to get down to a stop loss at that level. Because with the rate cuts, which rate cuts again tend to be bullish on the economy and weak on the currency, it would take quite a bit of momentum to try and get down below these two support levels from a technical perspective. Now, if the fundamentals are at least neutral, or you think soon at some point could really be in your favor with what we've talked about occurring in the Middle East, then maybe it's worth your shot here at a potential large climb. And so then I start to look at where would my take profit be. And it wasn't that long ago that this was up around 85, 84 plus. Here's the resistance level on the one-day candles, okay? And so without having to break this resistance up here, which wasn't that long ago, we could be up above 84, okay? So with that in mind, if I'm buying on this, and again, I'm not telling you should buy, but if the fundamentals in your mind set up that you think it's a potential opportunity here for a fundamental reason to drive this technical move up and to trust the support level, then it might make sense to make a move like this. So stop loss down below my lower support level down here, which was get down below 65, so 64.9. And my take profit was up here, 84. Wouldn't even have to break this high point here to reach 84, because 84 is down right about there, okay? Give or take a few cents. And so take profit, 84. And so this is banking on a potential big event occurring here globally that could drive fear about crude oil supply, potentially. So we start looking at trade sizes then. If I do one lot, I'm risking 4,000. So if I do 0.1 or 0.15, now I'm risking closer to 1% of my balance, 0.12, 0.13. Okay, now I'm at about 1% risk on my account, give or take a slight amount, and going after closer to 3% plus potential profit. Okay, so technically speaking, that's an opportunistic setup. And fundamentally, you might have some reason to believe that that could potentially occur. We go back to the 1 week candles. We can then see stop losses here. This is where we just put our stop loss below this wick, below this support level, and this low point here. So stop loss down here, take profit up here before the resistance. It wouldn't have to break this high point here. So technically speaking, it's within this range here where it was support, resistance, support, resistance, okay? So it's kind of a ranging trade, and also in the direction maybe that fundamentals could help you, and with an opportunistic technical setup. So we've done an example here of a longer term type move, and the prior example or examples we were looking more short term. Okay, and so sometimes it's nice to diversify not just between different instruments, but also between shorter term moves and longer term moves. And so this diversification kind of makes it so you're not putting everything in one move, everything in one direction even, or one time frame. And that can help a bit with your risk management as well. Okay, I think this is a good place to stop. We've been going for, I don't know, 35 minutes or so. I don't want to push your attention for too long. Plus, let's leave you some time maybe to look at some charts and maybe make some trades this evening. Any last questions, comments before we end the session? Okay, there's a question on how do you look at different economic announcements, whether they're rate cuts or whatever they might be. Very simple. Go to the discovery section, go to the economic calendar, And then within the economic calendar, you can pick the date that you want or date range. Okay, so if I want just today, I would click on the 25th, and I can pick which countries I want to include. If it's Hong Kong, whatever countries you want. China, I know your question specifically was about China, so you can choose China. I already have it selected. And then you'll see what announcements are coming for whatever particular date that you choose. And as the numbers come in, you'll see them here. And this is what I was alluding to about the home sales in the US coming in better than expected. It was a decrease as expected, but not as big of a decrease. So they went down from 739,000 to 716,000 new home sales, but it was expected to drop all the way to 700,000 flat. So it actually came in better than expected with that drop. So this is what I was talking about. Some are believing, hey, it might be a soft landing in the US and not as bad economically as was anticipated with all the high interest rates. And so it's just one aspect of what we talked about, but you can see that here. And so the announcements out of China, maybe you need to look to tomorrow and see what's coming in and see, do you see announcements that are coming? Here's the interest rate decision here. Okay, so you can click on it and see. Oh, this is Switzerland, by the way. And so there's the rate decision out of Switzerland. That the expectation is a decrease. Okay, China's announcements tend to be up here. The Asian announcements are earliest, and sometimes you'll even see it the day before late night. But we don't see that here, so I don't see it listed. But this is a good place to come to find announcements, major announcements for any country that you're looking for. So that's a very good question. Thank you for that. Okay, specific questions about gold. As it's hitting new levels, can you say with current resistance, go up, so buy, option will move up? This, I'm reading the question. I certainly can't say whether or not gold will go up and break the resistance and go to new all-time highs again. But we did talk a bit about gold and what's happening right now. And I think there's a bit of a tug of war going on this evening, over the next 24 hours, with fear that could strengthen something like the US dollar as folks might leave the equities, the stock market, if there's fear of war escalation in the Middle East, as opposed to economic fear about inflation with interest rates going down, which then could weaken the US dollar and make gold more attractive. I think there's a tug of war between those two things right now. So it's a bit hard to predict which of those tug of wars will win in the end. But I think it's more acute right now, the fear about escalation in the Middle East. I think that's driving the movement more right now than the older rate cut news. That's my opinion on that matter. So it feels like gold's being pulled down by fear and a strengthening US dollar, as potentially equities could see a little bit of a bearish type pressure and move. Okay, if there really are fears of all-out war breaking out and a whole regional spread of that in the Middle East. But keep an eye on that. Keep an eye on the headlines, and that can help drive your decision more specifically on gold. All right, everybody, thank you for joining. Thank you for the participation, the questions, comments. It's helpful not just for yourself, but for others who are listening to hear the questions and the responses. All right, everybody, thank you for joining. Good luck with your trading this evening and moving forward in the week. And tomorrow I'll be back at it with a fundamental news focused webinar in the afternoon tomorrow. All right, everybody, bye for now.